Hi guys, a very good morning and welcome to this live broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacey Pereira, and I'm here to take you through all those news and cues that can go on to impact your trading day. And well, it seems like it's a new week, so perhaps a new high in the offing is what we could expect. Let me quickly give you a recap of what went by last week, and of course it was that roller coaster of a week to say the least, where we did see that extreme action there on the Lal Street, but finally markets recording their biggest weekly gain in 2024 amidst all that volatility. Of course, whether it goes past it and which will be the components driving it there is going to be quite interesting to be talking about. And let me bring on board my guest then. Without further ado, I have Ajit Mishra. He's the Senior Vice President of Technical Research at Religare Broking. Good morning, Ajit. Always a pleasure to be speaking to you on Monday mornings. But give our viewers a sense of, what we're looking at the Nifty, that roller coaster ride that we saw last week. Do you think we are, almost out of the woods, we could say now? 2,000 points was that range that we saw, the swings that we saw all of last week. But and interestingly also there were either gap ups or gap downs openings that we saw for the Nifty. What are the charts really providing this time? Are we rather to see another one of those gap up or gap downs today, or you think we are more into this consolidation mode now that we've fixed our place about 2300, so that's where we're going to be circling around? What are the charts saying?
Yeah, good morning, Stacey, and thank you for having me. So, Stacey, yes, it was indeed a roller coaster ride, extreme roller coaster ride, because we started the week with a bang, but the next day, market tanked sharply, engulfing the gain of last 5 months. And in the next 3 sessions, we are again back to the square around the record highs. So now the indications are still the same, that the kind of gradual recovery or momentum that we were seeing in the markets, maintaining since January, continuing in the coming days also. The good part is that now the sectors which were on the sidelines, Stacey, like IT, FMCG, they have started participating. So sectors like the rate sensitives, banking, auto, they have done exceptionally well in the past. So now I feel that the next leg, where IT still is down around 10 to 15% from their record highs, are going to fuel the rally or recovery or the upsurge in the index from here on. But the tone is likely to remain positive, but yes, it's going to be a gradual rise from here on also, is what the indications are. Upside 23,800, 24,000, that could be the probable targets positionally, and the tone should remain positive until we decisively break 22,600 marks. So it's a buy and dip market for the positional. Intraday also, I feel any dip towards 23,100 zone is an area where one can look for intraday buying also, with 23,400 to 600 being the positional target.
Right. What about the Bank Nifty, Ajit? Do you see any specific stocks that could be worth one's buying? Especially, after, if you look at it from the broader perspective, we did have the RBI also come out with a status quo policy on Friday. We also have them, cautioning about saying that there is that unsecured loans have moderated now, whereas the stance they've taken, or the regulatory overhaul that we saw when it came to NBFCs, that whole space also, now kind of seeing some bit of positive news flow, we could say. What about the whole financial pack? If you have to look at it, where should one be really, placing their bets at this point? Do you think there is more? And even the Bank Nifty index, do you think that it has a reasonable amount of entry points at this, we're already touching new highs and hovering around the 50,000 levels when it comes to the Bank Nifty also? So what would be your outlook on the Bank Nifty, the index, as well as components, be it, private sector banks or NBFCs? How should one be navigating that space?
So yes, in fact, it's been a good week for banking index also, because we could manage to make a new high in banking index. Broadly, it's trading in a channel, and we are trading closer to the upper band of the same. So 50,500, 51,000 is the upper band so far, and that's the area basically where we saw that the banking also resisted to cross. But the tone looks positive. There's no doubt about that. And the focus area should be specifically on the private banking majors and the one which have been consistently doing well. So Axis and ICICI, these are the two names which are largely holding their positive tone. There was hardly any correction during this recent downturn also. So these are the top two names. From the NBFC basket, now we've started seeing fresh traction in Bajaj Finance after a long period of correction. So that may continue to attract noticeable buying interest from every dip. And then lastly, Chola Finance. As a disclosure, we have recommended this to our clients also, which looks very strong on charts. So these are some of the names, but yes, PSU is something specifically that we recommend to avoid for a time being now, because despite the overall positivity in the sectors, I doubt there will be any meaningful recovery in the PSU pack. So
Right.
private banking majors, largely the top performers and a couple of names in the NBFC basket is something that you should focus on. For the banking index specifically from the levels point of view, 50,200 to 700 is what we are eyeing for the intraday being the hurdle. So look for any buying opportunity around 49,400 mark with 48,900 being the stop.
Interesting. In fact, so stay away from PSUs, and in fact, we'll be talking about a little more in detail. PSU banking pack was the only one seeing that bit of negative sentiment all through last week, and those were the ones that really took it on the chin, we would say, when we did see that worst day on June 4th. But after that, we've seen some bit of recovery for certain, at least mid-cap PSU stocks, but the banking pack was still down and about. In fact, let me just, since we're talking about the financial space, it is interesting to see what we're coming across from how these different financial players, be it one of the recommendations that even Ajit had was Bajaj Finance, and how that has really seen some breakthroughs in these past few weeks. But there is also news coming in on Paytm and how that has really improved its business. In fact, on Friday we did see that stock really zoom almost 10%, touching that circuit filter, and this because the circuit filter was revised for Paytm from upwards from 5% to about 10%. So the sales have not really shown that kind of recovery. We'll have to talk about those in detail, but let me go back to Ajit quickly and ask him about the levels that he's seeing for the Nifty, at least at this point. Ajit, newer highs, how are you looking at it?
So yes, Stacey, in fact, we were anticipating there could be a flat start, but market has other plans. And with newer highs now, I feel that the tone looks positive. And for the intraday, again, I would say that one should wait for any dip, because the kind of surge that we've seen in the last three trading session is prudent, because the risk reward is not favorable at the current level. So any dip towards, let's say, 300 to 340 area for the intraday is the zone where one can look for fresh longs, with 270 being the stop. Upside 23,600 is what we are eyeing for the intraday.
Interesting. What about, we were just talking about auto stocks. Is there a particular thing that you can pinpoint out at why there's so many rating downgrades that have come for the likes of Tata Motors or even a Maruti Suzuki, and what's happening in that pack? When it comes to sales numbers at the start of every month, we've seen some bit of growth, we would say, but is that not enough that analysts or brokerages are not really too sure about the auto pack at this point?
So it could be due to that, or plus we've already seen very strong performance from the auto pack. So in case if there'll be any lesser numbers expected, so that might dent the overall prospects, and that could be the reason why we are seeing these downgrades. But as of now, there is no indication price-wise that we are seeing in auto majors to slow down. In fact, M&M was among the top performing name in the Nifty last week, around 14% kind of a gains, and we are seeing a similar kind of traction in Bajaj Auto as well. The only stock which is slightly on the backward post numbers was Tata Motors, and there also we have started seeing recovery. But at the same time, from the short-term point of view, be very selective, because we have already seen a very strong surge. So there could be a bit of a gyration in between, but the tone looks positive. Sectors which one should be focusing fresh should be now IT, FMCG and pharma, because there we still have room, as we've discussed at the beginning. Auto being very selective now.
Right. In fact, since we talk about auto, there is, from the ancillary part of it, you can look at Samvardhana Motherson. That one, Moody's has upgraded the company's long-term issuer rating to a Baa3 outlook with an stable outlook rather. So, maybe auto ancillaries could be an interesting play compared to the, bigger auto players at this point, which is quite, nice to see, because you'll at least have some pockets that will be reacting to, the news flows that are coming in. Interestingly, I'd also want to point out on a brokerage note that has come in on Bharti Airtel. Now, CLSA has put a note on Bharti Airtel with a buy call and the target of 1,540 rupees per share. And this remembers because the company has now entered that $100 billion market capitalization club. This is, of course, led by the success in its mobile business is what CLSA is looking at. They also see that how India now has just about 4 companies with that market cap of over $100 billion. And India's mobile industry, of course, is seeing that momentum and growth, which is also backed by the management's execution of driving this company. They say that the market cap had barely moved for the entire decade, but since 2017 has seen about a 3.3% or 3.3 times growth that you're seeing for the company. And the 3 drivers are high growth, scalable business, the strong management, as well as the global competitive edge that Bharti Airtel sees. That stock, though, not reacting to this news, the fact that it's reached that $100 billion club. But Ajit, quickly to you, how should one be looking at Bharti Airtel? That one also has been among your top gainers, for most of last week, but today seeing some bit of pressure, we would say. There is this news flow, though, that is looking quite positive for the company, at least the call that CLSA has on Bharti Airtel.
So, Stacey, it's among the best performing name, from the telecom space. And in fact, otherwise also, if you see from the performance-wise, price-wise performance, it's been a consistent performer with hardly any retracement during the corrective phase, and it's been maintaining a positive tone almost for the last 3 years now. The stock has been trading at the record highs, so I feel that the recent development have already discounted the price, but the tone looks positive. So, in fact, in case if we get any dip from the trading point of view around 1400, 1410 zone,
to focus, a couple of news points that have come out from the railway stocks. Now, if you look at Railtel, that one has bagged an order of about 81 crore rupees from the National Informatics Center. This is quite interesting, and we're seeing that stock also react in that positive. You also had RVNL, which closed quite in the positive on Friday. This after this one has secured a deal by NTPC and for about 495 crore rupees. According to this deal, the contract is so that RVNL will be executing the balance civil as well as HM works of a barrage complex, and this for the Ramnam hydroelectric project in their stage 3. The stock saw that good up move on Friday and is continuing propped up. You can see there on your screens about nearing 1.5% of gain coming in there. Ajit, to you quickly, how should one be looking at railway stocks now with the news flow, of course, is there behind it. You still have to see the outcome of the budget and whether there will be a separate allocation made towards this. But if you have to look at particular stocks within railway PSUs, what would be on your list if you have to look at them?
So, Stacey, as you rightly mentioned, that most of the names they have done exceptionally well in the recent weeks, in the recent months, and now we are seeing a bit of a profit taking the higher levels, and which is natural considering that they have almost risen 8 times, 10 times in the last 1 year's low. And now I feel that among the basket, IRCTC is the only name which is left, which didn't participate much. Though post numbers, we saw some correction also in the stock. But now we are seeing gradual recovery from the long-term averages. So we feel that IRCTC could be one stock which one can look for accumulation. So 950,000, that should be the zone where one can look for accumulation IRCTC. And positionally, we can eye newer highs or maybe first 1100 first and then around 1200, 1250 levels. So this is the only stocks from the PSU railway basket which looks okay to us. Railtel, yes, it might continue to consolidate and we still have more rooms on the upside. But comparatively, from the risk reward perspective, I feel IRCTC is a better candidate.
Right. So risk reward perspective, IRCTC faring, positively there. So maybe last question to you on new age tech stocks. You could say there are a couple of brokerage notes that have come out on Zomato. Not so much in the positive because there's going on to cut a couple of their FY25 and 26 earning estimate because they're saying that maybe the margins from Blinkit might not look as what they were looking at. How should one be looking at Zomato? There's also a note on delivery, but if you could tell us what the charts are for Zomato, somewhere around 100 is the price target that has been put by this brokerage. But what can we say for Zomato at this point, or new age tech stocks if you look at it from a broader perspective, but this one on the charts?
In fact, Stacey, from the entire space, Zomato, if I'm not wrong, is the only stock which could reclaim its, IPO's high. I doubt that there'll be any major underperformance based on, the short-term projections and all. But broadly, yes, we have seen a very sharp, steady up move in the stock, and it is normal that we see some correction, consolidation after a phenomenal run, almost like 3 times, 4 times from the record lows. So, from the short to medium term, I feel it's still a buy on dip candidate. Closer to around 170-60 zone is an area where one can look for impact re-entering into the stock. And it's going to be a healthy correction by that time. And again, newer highs close to around 210, 215 is something that one can look forward to in the next 2 to 3 months. Apart from Zomato, Policy Bazaar is also looking interesting to us, and Nykaa. So Policy Bazaar, again, like the second stock from that list of new age company, which has done comparatively well in the last 6 months. And we feel that there's more uplift to this current recovery. Nykaa, though, is still struggling, around the recent lows, but the kind of price action that we are seeing from last 6-8 months, the downside seems capped in the current level. So, in case if somebody is stuck at the high level, they may continue to hold. But rest of the names like Paytm and delivery, they might continue to struggle at least for a time being now, though we continue to see some reaction, positive reaction on some news item and all. But the trend has not reversed for any of these names. So for a time being now, stick with the top performers.
To stick with the top performers, maybe Zomato might be there, although Macquarie is not giving it such a thumbs up. They have, in fact, gone on to cut their price target for the discounted cash flows by about 4% to uncertainties from the external headwinds that could occur. That could be quite interesting. Ajit, let me get a last word from you. Also, there's one query coming in on Lind India, the Bosch company. What are the charts really looking at? Raj Nelani wants to know your view on that, and also if you have any other picks for or recommendations for our viewers, what would those be?
So, India, it's not a stock where one should look for short-term trading opportunities because volume-wise, the price action, the volume remains subdued largely. During the updates, we generally see strong traction. So, if your view is long-term, you should definitely stay put. Though it's a highly volatile stock, nowadays we have started seeing, sharp swings. So 7,500 is the new base now from the short to medium term perspective. Until we close below this mark, you can stay put with 10,000 and maybe higher as your positional target. From the recommendation point of view, we have already discussed about Bharti Airtel and it looks interesting to me. And I feel that one can in fact look at fresh buying also in Bharti Airtel with 1390 as a stop and 1495 in the target area. And the stock which have not participated much in the order run-up so far, Tata Motors, there also we are seeing recovery now. And it might catch up in line with what we are seeing in the other automakers. So 1005 is what we are eyeing in Tata Motors. So one can go long in Tata Motors also with 954 as a stop.
Quite interesting picks there. You have Bharti Airtel, which has entered that $100 billion club, and also Tata Motors. Well, completely out of time, so let me thank both my guests, Ajit Mishra from Religare as well as Siddharth Pambre of Ajit Mehta Investments. Thank you so much, gentlemen, for giving us your time, speaking, helping our viewers with their queries, as well as giving us perspective on how we should be going about in this market from here on. Well, but we're completely out of time, but I'll be back here tomorrow morning with more, stocks that you could keep on your radar, as well as to remind our viewers that do keep sending us your queries, because that's where, we like to understand where the interest is, where the buying, or which stocks could perhaps, be something that you would want to get your price targets or, your stop losses on. That's something that we would like to have addressed on the show, but completely out of time here. But from the whole team that puts this together, big thank you for tuning in every morning. Also, do keep sending us your feedback in the comment section below, and follow us on the link at the bottom of your screen. Subscribe to Money Control, and for all your other updates, you're going to get them on moneycontrol.com as well as the Money Control app. I'll be back here tomorrow morning.